Good
क्या
afternoon.
कोठारी साहब यार लाइक
Good afternoon,
कोठारी
friends. Good afternoon, friends. The Institute of Chartered Accountants of India solemnly prays tribute to the innocent life lost in the Pahalgam terror attack and extends its deepest condolence to the brave families. Our thoughts are with them, and we wish them strength and solace in the time of immense sorrow. The ICNI stands united and in solidarity with the victim and their families during these profound, difficult times. To extend our condolence, we request you all members to observe 2 minutes of silence now, and then we would begin with the today's webinar. Thank you. Thank you. Good afternoon, friends. I am CA Nayan Kothari, moderator for this webinar today. We are delighted to welcome you all to this webinar, which is being organized by Continuing Professional Education Committee of the ICAI. I request you to block your calendar on every Friday to get insight into various emerging and high-value technical topics. Today, it's my pleasure to be moderator for the webinar, Precautions in Company Audit and MSME Subsidies in India. In short while, we shall start with this webinar. First, I would like to appraise you about the CPE committee. The role of chartered accountant is evolving continuously to accept new responsibility in a dynamic global environment. The future of CAs depends on being flexible and open to new innovation. Therefore, the need of an R is to innovate as per the requisites of the contemporary business environment and accordingly upgrade the curriculum and education system of chartered accountancy course. Friends, this committee also believes that member of the ICI should look beyond the traditional areas of the practice, seek and explore new areas of the business and profession. Hence, the CPE committee is mentoring the members by providing guidance through various workshop, seminar, national conferences, and background materials, etc. And simultaneously encouraging young and dynamic professions to grow as speakers, master of ceremonies, etc., in various CPE programs. Program for this evening is as follows. We shall be having two sessions of 1 hour each on the topic precautions in company audit, followed by MSME subsidy in India, role of chartered accountant. Our eminent speaker will talk to the above mentioned two emerging areas of the professional interest. We do have with us the chairman of the committee, CA Shri Satish Gupta ji. I would like to briefly introduce our chairman of the committee to this August gathering. Shri Satish Kumar Gupta is Central Council member for the term 25 to 29 and had also served as a CCM in the term 2019 to 2022. He hails from the Pink City, Jaipur. He currently serves as chairman of CPE committee and had been the chairman of SMP committee of SAFA, that is South Asia Federation of Accountants, and CSR committee in past. Sir has received honorary awards such as Excellent Branch Award, and Special Silver Shield award being during the chairmanship of Jaipur branch, Best Member of the Year 2004 award, etc. He has written more than 8 papers and had delivered lectures in different seminars, RRCs, webinar on the topic like GST provisions, income tax assessment, reassessment under the income tax, etc. With these words, I introduce before you our very dynamic chairman of the committee, Sri Satish Gupta ji. Sir, we would like to have words of wisdom from you. Thank you, sir.
Thank you, Nayan. Thanks a lot. Wonderful moderation. We have 2 speakers of the day. One is my friend Vikram. He's a very dynamic person and having a very vast knowledge in the company law matters. And Modi ji, to whom I believe that he can make several changes to the profession by his innovative efforts and knowledge. And my brother, secretary of the committee, very dynamic, very proactive, Tiwari ji, and the members of the team, of the committee and the technical team. And my dear friends, who in very large number are attending this webinar on 2 very important subjects. As rightly told by the Nayan, the one topic is precautions while finalizing the company audits. The another one is the MSME opportunities for the chartered accountant. And both of the speakers are renowned and having vast knowledge and experience. I think they will deliver their best, and all the attendees will take most of the benefit out of their deliberations. Friends, CP committee is growth engine for the professionals. If we do not attend CP, we do not keep updated from the latest provisions, definitely we are going to face some problems in the practice. And times have changed, and now there is a very hard need of the CP programs. And your committee decided to reach the remotest member of the institute. For this, we are coming up a very good program this year, Sarv Sulabh CP program. In this program, we are going to reach every member, every chartered accountant of the country through our CP programs. Apart from this, friends, we are going to make this CPE credit a real-time credit. We need your suggestions that how we can make the CPE credit a real-time credit, meaning thereby that a member attends 2-hour conference, he will get credit of 2 hours. If he attends 1-hour conference, he will get the credit of 1 hour. That true on real-time attendance basis. We are just going for finalizing a program, system-based program for this. But if you give a very good suggestion, we would definitely love those suggestions, and we would like to incorporate all your suggestions in this endeavor. So friends, with this, I don't want to say so much. Yes, we have witnessed 4 days back a very, I think I can say an event which can never be loved. It can ever be hated only. And CP committee has taken the step to giving 2-minute silence prayer for all those who are our martyrs. I would say martyrs only. And we are with the country, we are with the government, we are with ICI, and we, under the dynamic leadership of our president and other council colleagues, we will definitely go to the way, whatever is being suggested by the leadership. So I would not take much of your time. I wish that this particular session goes the way which you like. Thank you very much. Thanks a lot. Thank you, Nayan, for giving me this opportunity. Thanks a lot. Over to Nayan.
Thank you, sir, for your very informative words of wisdom and the opening remark about CPE committee and its initiatives. Friends, now it is time to listen to our learned faculty, starting with Sri Vikram Sarafshar. Vikramji is distinguished and experienced practicing CA and also been law graduate with over 2 decades of experience. He has established himself as an expert in the field of Companies Act and providing guidance and insight on matters related to corporate law and corporate governance. His dedication and contribution have been recognized by the ICAI and he has been appointed as special invitee to Corporate Law and Corporate Governance Committee for the term 23-24. This prestigious appointment reflects his standing and involvement into the profession. Friends, we are fortunate enough to have insight about the topic from very learned faculty, CA Shri Vikramji. I hand over the session to Vikramji for about till next 50 minutes, and then we will have 5 minutes Q&A from the members. Welcome, and over to you, CA Vikram Saraf. Thank you.
Thank you, sir. Thank you, Nanji. First of all, I would like to convey my thanks to CP committee who has given me this opportunity to share my views on today's topic with all of you. Thank you very much. Sir, today's topic is precaution while conducting company audit. Friends, we all are doing audits. The chartered accountants who are practicing in audit sector, we all are doing company audits and tax audits. Maybe number of company audits are less than in comparison to tax audit. Friends, nowadays MCA, the governing body of Companies Act, is more focusing on the triple I concept: inquiry, inspection, and investigations. In this course, they have shifted the day-to-day work from the respective ROCs to the centralized system located in Manesar. Now, all the incorporation of companies and LLP work, all the work related to strike off of LLP and companies, and the most of the forms which were approved in non-STP mode are now shifted to Manesar Center. So in this way, they have made all the ROCs free, and now the ROCs are free to take care about the triple I concept only. And within year 1 or 2, we will see that many notices will come to the companies regarding violation of number of provisions of the Companies Act. Friends, when we talk about the companies audit or MC authorities conducting any triple I action, first of all, they check the audited financial statement. The basic difference between tax audit and company audit is that in company audit, there are a number of disclosures requirement which we require to make in the balance sheet, financial statements, and every document of the Companies Act. Friends, if I talk in theoretical terms about the company audit, then system is that balance sheet is drawn and finalized by the management, and we have to pass our comment through our audit report. But if I talk in practical sense, then the matter is something different. In practical sense, in most of the cases, balance sheet are drawn in our office, and we are drawing the balance sheet, we are making the comment, and we are making the audit report. In this case, it's more important for us to check the balance sheet, to check the financial statement, and conduct the audit in compliance with the various provisions of the Companies Act. Now, I'd like to share my screen. Friends, if we discuss about the company audit is a statutory requirement under the provisions of Companies Act 2013, irrespective of turnover of the company. It may be rupees 1, or it may be rupees 1 crore, or it may be rupees 100 crores. Every company is liable to get its account audited under the provisions of Companies Act. Friends, like in income tax, we don't have any turnover criteria in Companies Act. Irrespective of turnover, irrespective of operations of business, we have to conduct an audit. Friends, in case of financial year, first year, we have to check what is the date of incorporation of the company. Say, if our company is incorporated after first day of January of the respective year, then its first year will be completed in the next year. Like, for example, if my company is incorporated on 10th January 2025, then my first financial year will end on 31st March 2026. Friends, in earlier Act, Companies Act 1956, there was an option with the company. If they want, they can conclude in this case, if they want, they can conclude their year on 31st March 25. And if they want, they can conclude their year in 31st March 2026. But after induction of new Act, that is Companies Act 2013, this option is no more with the companies. Now, in case of first year, if your company is incorporated after January, first day of January of the respective year, then your first financial year will be completed in the 31st March of the next year. Friends, with respect to our other acts like GST or Income Tax Act, the financial year will be ended on 31st March 25. We have to complete all the compliances of the relevant act like companies like Income Tax Act and GST Act for the period ended on 31st March 25, and we have to conduct first statutory audit of the company for the year ended on 31st March 2026. Friends, when we talk about the preparation of financial statement, the relevant provisions of the Companies Act are mainly three provisions are relevant for preparation of financial statement and conducting an audit. Friends, first is section 129, which defines what is the financial statement, how it is prepared, and what are the consequences if any lacuna is there, any compliance is not made. Another section is section 133, which pertains to accounting standards. With respect to Companies Act, the accounting standard made and approved by our ICI team are adopted by the Companies Act, and all the accounting standards are applicable in case of companies. And third relevant law is Schedule 3. Schedule 3 is the main provision which instructs us how to prepare the balance sheet and statement of profit and loss. Friends, when we prepare the financial statements, I have noticed that we are not complying with the general instructions of the preparation of balance sheet and statement of P&L, which are given in Schedule 3. Friends, when ROC or RD offices are conducting inspections of the company, they are just checking it from the Schedule 3 point of view. And in case of violation, the quantum of penalty in these violations are very high. Like penalty varies from 50,000 to 5 lakhs, and that is applicable on company and all the directors who are in default. Friends, I will start with the definition of financial statement. The financial statement is defined under section 2, subsection 40 of the Companies Act, which says that financial statement includes what? Balance sheet, first of all balance sheet, then statement of profit and loss, or statement of income and expenditure as the case may be. Statement of income and expenditure is prepared in case of section 8 companies. Then cash flow statement, if applicable. Friends, in case of small companies, OPCs and dormant companies, preparation of cash flow statement is not mandatory. Then statement of changes. This is applicable, statement of changes in equity. This is applicable in case drawn as per the Ind AS. And then significant accounting policies and notes to accounts. Friend, these 5 things constitute the financial statement. We have to verify all the contents of these financial statements, and we have to pass our comment through our audit report. But friends, as I stated in initial statement, that the balance sheets are prepared in our office. So when we are preparing the balance sheet in our office, in few points we mention the point like we are preparing the balance sheet. Like in case of cash balance, we mentioned that the cash is not physically verified by us, it is taken as valued and certified by the management. And same thing we used to write in case of stock. That stock is not physically verified by us. This is taken as valued and certified by the management. Friends, please note that these are the financial statements, balance sheet and profit and loss and notes are not our duty to prepare. So whenever we are preparing the financial statement, we should not write the language like this, that this is taken as valued and certified by the management. Because the financial statements are prepared by the management itself, it's a practical thing that they are prepared in our office, but theoretically it's a responsibility of the management only. It's not the responsibility of auditor. Friend, the main focus is on general instruction for preparation of balance sheet and statement of profit and loss. Schedule 3 is divided into 3 parts. Division 1st, 2nd and 3rd. Division 1st is applicable on the companies whose financial statements are prepared in accordance with the accounting standards. Division 2nd is applicable on those companies whose financial statements are drawn in accordance with the Ind AS. And Division 3 is applicable on the companies whose financial statement are drawn in compliance with Ind AS and the companies are NBFCs. So in most of the cases, in most of the practicing chartered accountants, they fall under the category division first, because now after revision of small companies definition, more than 90% companies are covered under the definition of small companies. Friends, this general instruction says that if any disclosure is required by virtue of provision of Companies Act or by virtue of provisions of any accounting standard, and the general instructions are provision of general instructions are contrary to that, in that case the provision as mentioned in the act and accounting standard will prevail, and we have to comply with the provisions of as mentioned in the Companies Act and accounting standard. Friends, the disclosures requirement prescribed in the general instruction is in addition to the requirements as prescribed under the provisions of Companies Act and accounting standards. We cannot say that these requirements are in substitution of the requirement as required under the Companies Act or accounting standard. Say, for example, in case of 186, Section 186 says that when company has given any loans and advances to anybody, then in notes the company is required to disclose that to whom this loans has been given, what is the purpose of the loan given, and what is the rate of interest the company is charging therefrom. So see, this is the requirement of Section 186, whereas this is not mentioned anywhere in the general instruction under Schedule 3. So in this case, since it is a requirement of Section 186, we are required to report this transaction in a financial statement. Friends, today we are not going to discuss technically what is the financial statement and how it is prepared. Today my focus is to discuss the small things, small points which we should take care as an auditor while finalizing the audit under the Companies Act. Friends, the Schedule 3 was revised during the year 2021. In March 21, it was revised and it was effective from the financial year 21-22. The balance sheets prepared for the year 21-22 are in accordance with the revised Schedule 3. Friends, I'm covering some points which are mandatory for us, and I'm watching that still our chartered accountants are not complying with these provisions. First provision is rounding of the figures. Friends, after introduction of revised Schedule 3, now it's a mandatory for every company to prepare its financial statement in rounding off. It cannot be prepared in absolute number. Rounding off is to be done on following cases. If the total income of the company is less than 100 crores, agar company ka total income is less than 100 crore, then rounding off will be done to the nearest 100, 1000, lakhs or millions as the company wants. And if the total income of the company is more than 100 crore or more than 100 crore, then the financial statements are required to be prepared in nearest lakhs, millions, crores or decimals thereof. Friends, once you have adopted any criteria for rounding off, like if your turnover is less than 100 crore and you have selected that your balance sheet is to be prepared in thousands, then the entire statement you have to take the same unit of measurement and you have to prepare the entire financial statement in thousands only. Friends, before revision of the Schedule 3, the term used for this purpose was instead of income, total income, it was total turnover. Now the definition has been revised and now we have to check the total income. Total income includes the sale proceeds as well as other income of the company. Friends, general points, as I said earlier, today we are just discussing the general points. Friends, when we are preparing the financial statement of the company, on top of the balance sheet, we have to mention that amount, unit measurement which we have taken, that amount is stated in 100, lakhs, thousands, whatever unit you have taken as measurement, you have to mention on the front top of the balance sheet. And we have to separately mention in that unless otherwise stated. Why I'm saying unless otherwise stated? Because in few points we are mentioning the absolute number. Instead of rounding off, we are mentioning the absolute number, right? Like in case of EPS, earning per shares, we are not writing this EPS in lakhs or thousands or hundred. We are writing this EPS in absolute number. So we should write on the top of the balance sheet that amount is given in so and so denomination, and unless otherwise it is stated. Friends, second point is DIN of the signing directors. Friends, when balance sheet is signed, it is signed by the two directors. It's our standard practice to mention the name of the person who is signing the balance sheet for and on behalf of the company. And we are mentioning the designation thereof also, like if he is managing director, if he is director, if he is company secretary, we are mentioning his designation as well. But in few cases, I observed that the company is not mentioning the DIN number of the signing person. Friends, it is the prevailing law as per section 158 of the Companies Act. It's a mandatory requirement to mention the DIN number in along with the designation of the director when he's signing any document in capacity of the director of the company for and on behalf of the company. Friends, due to non-mentioning of this DIN number, ROC has adjudicated so many matters and penalty in lakhs of rupees has been imposed on the company and directors as well. Friends, then we come to next point. This is UDN on balance sheet. Friends, UDN is generated by us as chartered accountant. When we conduct the audit, we complete the audit, we generate the UDIN. I observed that few of the professionals are mentioning the UDIN on the balance sheet of the company. Friends, please note that UDIN is not required to be mentioned on the balance sheet. It is to be mentioned on the audit report issued by us. As the balance sheet is not prepared by us, it is prepared by the management. We are just giving our audit report. So we should mention the UDIN only on the audit report. We should not mention the UDIN on the balance sheet. Then FRN number, firm registration number, which is given by the ICI to us. We should mention wherever we are mentioning the name of firm on behalf of which we are certifying any document or we are certifying the financial statement, we should mention the FRN of the firm along with the name of the firm. It's again mandatory requirement of the institute. Friends, in case of losses, for example, if accumulated losses as on the balance sheet date are more than the paid up capital of the company, say for example, your paid up capital is rupees 1 crore and accumulated losses as on the date of balance sheet 31st March 2025 is more than 1 crore, then it's a mandatory requirement as an auditor for us to mention this fact in the audit report of the company that the capital of the company is significantly eroded. Friends, please note that whenever we are passing any comment, any observation, any disclaimer, any opinion and the balance sheet, then parallelly company is required to explain that point in the director's report. So whenever the losses of the accumulated losses of the company are more than the paid up capital of the company, then we have to mention this point in our audit report and company is required to comment on this point in their director's report. Friends, next point is conversion of unsecured loan into equity. This is standard practice in private limited, specifically in private limited company cases, that whenever the company requires the funds, the company take the funds from the directors and the relatives, and whenever they approach to the bank asks them to increase their paid up capital, so they just issue the shares on account of unsecured loan which we have received from the directors. Friends, this type of provision is not allowable in the Companies Act. If you are taking any unsecured loan which is to be converted into unsecured loan later on, then it's a mandatory requirement for you to first pass a special resolution and file a form MGT 14 with the registrar of companies that we are taking this much of loan from this person, and after this much of time we will issue the equity share of the company to so and so person. If we are doing this without passing the special resolution and without filing the form MGT 14 with the respective registrar, then it's a violation of Companies Act, which is again a standard practice, and we should avoid this type of practice. Friends, in balance sheet we use the term fixed assets. I observed that still some of the chartered accountants are mentioning the word fixed assets, whereas the accounting standard AS 10 is changed in 2016 and the word the term fixed assets has been replaced by the term PPE. Now it's required that we should not mention the word fixed assets in the financial statement. We should mention this word as PPE, property, plant and equipment. Friend, this word is not replaced for the corporate SSCs. This word is replaced for the non-corporate entities as well. So we should take care of it that our balance sheets are prepared in accordance with the accounting standards as well. Then we comes to word profit and loss account and statement of profit and loss. Friends, in general parlance, we use the word profit and loss account. Whereas the Schedule 3, revised Schedule 3 states that the word for profit and loss is statement of profit and loss. It's a not profit and loss account. So while drafting the audit report and financial statement, we should take care that we are using the word statement of profit and loss, not the word profit and loss account. Then friends, we comes to loans and advances given by the company. In this case, while conducting the audit, we have to check that provisions of section 185 and 186 of the Act are duly complied with. Friends, section 186 says that whenever you are giving any loan after a certain limit, then you are required to pass a special resolution and you have to file the same with the concerned ROC. Trade receivable now, after revision of Schedule 3, there are so many bifurcations in the trade receivables, like up to 6 months, 6 months to 12 months, 12 months to 1 year to 2 years, 2 years to 3 years, 3 years and more. We should take care that we are giving this bifurcation properly, and we should cross-check and reconcile that the figures given by the company to the banker, where they have taken the loan from the bank, the figures are reconciling with the statement given to the bank. See what happens at the time of finalization of the balance sheet, we don't reconcile the figures, and when we check the banker's record, the figure comes something different. So we should take care while finalizing the financial statement. Inventories. Friend, in case of inventories, we have to follow accounting standard 2, valuation of inventories. And I noticed that in most of the cases in accounting policy, we are mentioning that stock is valued at lower of cost or NRV. This is the standard language which I observed in more than 90% cases. We are using that stock is valued at lower of cost or NRV. Whereas accounting standard says the method of valuation is stock is valued at lower of cost and NRV. Friends, on this point, due to this difference of or and, MCA is doing so many compounding and they have imposed so lakhs of penalties on the companies. This is simple interpretation of the line. So we should take care that we are mentioning the accounting policies which is allowed as per accounting standard 2 only. Friends, then EPS, earning per share, accounting standard 20 says that whatever your earning is, EPS per share, that is diluted earning per share and basic earning per share, it should be mentioned on the face of the statement of profit and loss. If we are not mentioning it on the face of this statement of profit and loss and we are mentioning it in the notes to accounts, then it's not in accordance with the provisions of Companies Act. Then it will be treated as violation of the Companies Act. Then next point is details of remuneration paid to statutory auditors. Friend, in notes to administrative expenditures, we give a detail. Whatever the remuneration is paid to statutory auditors, that should be bifurcated in on what account we are giving this amount, like for statutory audit, for taxation matter, for consultancy matter, for other matters, or for reimbursement of expenditure. Friends, what mistake is we are generally doing here? Say, for example, if we have any internal auditor in the company, or we have the tax auditor in the company who is not the statutory auditor of the company, so few of the chartered accountants are giving in this point information related to the remuneration paid to the all auditors. Even he is tax auditor, he is internal auditor, or he is tax auditor, or he is company auditors. Friends, please note that in this point, we are required to give only the information related to statutory auditors. whatever fees we are paying to internal auditor and tax auditor who are not the statutory auditor of the company, that should be classified under professional fees. Then next point is utilization of borrowed funds. Friends, utilization of borrowed funds after revision of Schedule 3, there are so many requirements in utilization of borrowed funds. We have to comment on it that whether the funds taken by the company are utilized for the purpose for which they are taken. Like if they are taken for purchase of plant and machinery, they are utilized for the same purpose, not for any other purpose. Secured borrowing against current assets. Friends, when the company has taken any CC limit or OD limit from any banker against security of current assets like stock statements, debtors, and all, in that case, we have to check all these figures and we have to reconcile these figures with the statements given to the bankers. This may be given on quarterly basis or on monthly basis. We have to check, and if there is a significant difference between both the statements, we have to report the figures in the audit report. Loans and advances given, granted to promoters, directors, and KMPs, we have to take care that these are in provisions of the in compliance with the Companies Act. No violation has been made. Trade payables. Friends, trade payables, in case of trade payables, on the face of the balance sheet, we have to bifurcate the amount payable to the MSME units, micro and small units, and amount payable to other units. Now, after the introduction of Section 43H in Income Tax Act, this topic is become more relevant for all the companies, all the SSCs. So now we should take care that the figures given reported in the balance sheet are reconciled with the figures whatever we are reporting in tax audit. Friends, further, every company who has outstanding amount payable to micro and small enterprises and the amount is pending for more than period of 45 days, then the companies are required to file Form MSME 1 with the Registrar of Companies. This form is filed on half-yearly basis. So friends, while finalizing the audit, we should take care that the figures given in the MSME 1 should be reconciled with the figure which we are giving in the financial statements. Then borrowings. I have noticed then that in case of borrowing points, in Schedule 3, number of informations are required from us. Like if your loan is secured loan, then what security you have given, what is the repayment schedule, what is other condition of the loan, we have to give in that note number of the balance sheet. Further, we have to check whether the registration of charges, modification of charges, and satisfaction of charges is done with ROC or not. Friends, here what is the problem with ROC? If you have taken any loan or you have modified any loan and a period of 120 days has been lapsed, then you don't have any option to get the charge registered with the ROC. Even with condonation of delay with the regional director, you cannot file this charge. And as auditor, we have to comment on this point, whether the company required to create any charge or modify any charge has done the same or not. So please take care and advise your clients timely that they are creating their charges with the ROC. Friends, further we have to reconcile the figure with DPT3. DPT3 is a form which is related to filing of return of deposit with the Registrar of Companies. Friends, the due date for filing of DPT3 is June. This is the 30th June of the respective year. Whereas practically we are finalizing the balance sheet in the month of August, July, August and onwards. So the problem in this case arises that at the time of filing of DPT3, we put some other figures, and while finalizing the financial statement, we put some other figures. So friends, in this case, it's advisable that with relation to loan figures and deposit figures, we should reconcile the figures before filing of DPT3. If in case we are getting late and company is required to pay some additional fees, then we should pay the additional fees instead of we are filing the incorrect information with the ROCs. Analytical ratios, we have to give 11 ratios in our notes to accounts. The main point to introduce these analytical ratios of the MCA was to reconcile with the information you are giving with the bankers in case of loan taken by the companies. Friends, cash flow statement. Cash flow statement, MCA doesn't prescribe any method under Schedule 3 to prepare the cash flow statement. We have to prepare the cash flow statement in accordance with the Accounting Standard 3. Accounting Standard, as I already discussed, accounting standards are mentioned under Section 133, and accounting standards are same as issued by the ICAI. Then small and medium-sized company, SMC's company. Friend, the main benefit given to the SMC's companies is that in case of SMC company, few of the accounting standards are not applicable at all, and in case of few of the accounting standards, we don't require to give much disclosures as required in other than SMC companies. There are some of the disclosure requirement are exempted in case of SMC companies. Friends, in case of cash flow statement, please note that as per Section 2, subsection 40, which defines the financial statement, preparation of financial statement is not mandatory for small companies, OPC companies, and dormant companies. But Act doesn't restrict us to not to prepare the cash flow if you want to prepare. If you want to prepare cash flow, you can prepare. But if you are not preparing the cash flow in these three cases, then it's a not violation of any provision of the Companies Act. Friends, AS3 says that cash flow statement can be prepared by using two separate methods. One is direct method and another one is indirect method. Whatever method we are using, direct or indirect, we have to mention it on the face of the financial CFS that while preparing the financial cash flow statement, we have used so and so method. Even in one of my case, my client has not mentioned this fact on the cash flow statement. So we got that offense compounded by the RD and we paid around 10 lakh rupees as penalty. So we should take care that these type of small mistakes are not conducted by us. Then we have to give the definition of cash and cash equivalent. The same should also be given on the face of the balance sheet. An investment normally qualifies for cash and cash equivalent only when it has a maturity period of short-term maturity period, that is of period up to 3 months. Friends, while preparing the cash flow statement, we should reconcile the amount of cash and cash equivalents in cash flow statement with the amount given in the note related to cash and cash equivalent. Friends, what happened when, say for example, if your company was not small company or your company was preparing the cash flow statement till March 24 and in March 25 your company is out of the ambit of cash flow preparation of cash flow statement. In that case, what happens? We exclude the preparation of cash flow statement, but in our audit report, due to copy-paste mechanism, the word balance sheet, statement of profit and loss, and cash flow statement. From that balance sheet, we are not deleting the word cash flow statement. So please take care that when we are not preparing the cash flow statement, we should reconcile with our audit report that we are not mentioning the word cash flow statement. And whenever we are preparing the cash flow statement, the same fact has been reported in our audit report. Friends, if we talk about the accounting standards, so there are so many accounting standards. Accounting standards, each and every accounting standard requires a separate session to discuss the provisions thereof. But please note that accounting standards compliance is very important from ROC point of view, from ministry point of view. So I have prepared this list. These are the accounting standards which are applicable in most of the. So while finalizing any audit, either it's a small company or it's a other than small company, we should take care that we are complying with all these provisions of the accounting standards. These are AS 1, 2, 3, 9, 10, 11, 13, 15, 16, 17. Like AS 17, if your company is SMC company, then AS 17 is not applicable at all on your company. AS 18, 19, 20, 22, 26, 29. Friends, what is this SMC company? Small and medium-sized company. I am repeatedly saying that what is SMC company? The definition of SMC company was revised in June 2021. And now the definition of SMC is a company whose equity shares are neither listed nor in process of listing before any stock exchange, who is not a bank, financial institution, or any insurance company, whose turnover doesn't exceed 250 crores, excluding other income. In this case, they are not including other income. which doesn't have any borrowings, including public deposit in excess of 50 crores or more at any point of time during the year, and the company is not a holding or subsidiary of a company which is not a subsidiary company, SMC company. Friends, in case of SMC company, please note that we have to mention this fact in notes to accounts of the company that the company is a SMC company in accordance with the provision of section 133 of the Act. If we are not mentioning this fact, we cannot take the advantages of this SMC concept. And please note, if we are availing any benefit of SMC company and we are not reporting any accounting standard, then it should be complied with completely. We cannot do like this. If we are required to report 4 informations related to any company, and our company is SMC, and due to SMC we are not liable to report any information. In that case, we cannot behave like this. We are reporting 2 information and we are not reporting any 2 informations. So this is the definition of SMC company. Then we comes to general provisions which are required to be checked at the time of conducting audit. Section 73 to 76 related to deposits and loans. Section 77 to section 82 which are related to creation, modification and satisfaction of charges. Section 135 and rules thereof which are covering CSR. Section 185 loans to directors and their relatives. Section 186 which are related to loan, guarantee and investments made by the company, and section 188 and 189 which are related to related parties. These are some of the sections which are to be taken care while finalizing any of the company's audit. Friends, the most important topic for in today's context is small company. Definition of small company. It's very important for us to understand the definition of small company. The concept of small company was introduced in Companies Act 2013 only. In 1956 Act, there was no concept of small company. There was no definition of small companies. In Companies Act 2013, the small companies definition was given in initial stage. Then it was revised, and then it was finally revised in September 22. It was lastly revised on 15 September 2022. Definition of small company is defined under section 2 subsection 85 of the Act along with the rule. This defines that small company means a private company. Small company means a private company which fulfill both the conditions. There are 2 conditions which a company is required to fulfill for the purpose of classification as small company. First condition is that paid up share capital of company does not exceed rupees 4 crores. Friends, here we have to check only paid up share capital. We don't require to check the reserve and surpluses. The only paid up capital share, if that capital is below 4 crores, then one condition is fulfilled. And then second condition is turnover. Turnover, when we have to check the turnover, whenever we are checking the turnover, we have to see the turnover of the immediately preceding profit and loss account. And that turnover should not exceed 40 crore rupees. If both these conditions are fulfilled by the company, then this company will be classified as small company. Friends, the main point comes here is what is the point of time when we have to check these conditions? Like if you are finalizing any audit for the financial year ended on 31st March 2025, and I say that capital of that company on 31st March 2025 is rupees 5 crore, and your turnover is below 40 crores, then your company will be classified as other than small company. Event date, the respective point which we have to check is the event date. In our case, if we are conducting audit for financial year 24-25, the event date is 31st March 2025. Even we are conducting our audit in August 25 or July 25 or September 25, but still we have to check these limits as on 31st March 2025. When this change was introduced in 15th September 2022, then we received so many calls from so many members that, sir, as on 15th September 2022, our definition, as per new definition, our company is like this, our company is falling under small companies. But friends, this provision is to be checked on the balance sheet date, not as on the date of signing. We have to check on the event date only. These are some exceptions of the small company. Like a public company can never be classified as small company. A holding company or a subsidiary company cannot be classified as small companies. Friends, an associate company can be a small company. Associate company is a company in which one company has 20% or more shareholding, but less than 50% shareholding. That is an associate company. An associate company can be classified as small company. Section 8 company can never be classified as small company, or any company or any body corporate which is governed by any special act like Housing Act and Insurance Act. These companies can never be classified as small companies. Friends, what is the advantages to the small company? CARO is not applicable in case of small companies. Friends, when your company is classified as small company, you don't require to check any other conditions for applicability of CARO. Only one condition, that your company is not a small company, you're out from the applicability of the CARO. Friends, some of the professionals says that even CARO is not applicable on us. Even if we are reporting the CARO, then what's the wrong in it? So friends, in my opinion, if anything, any reporting is not applicable on us, or still we are reporting it, it's again a violation. It's again violation of our code of conducts. Any information related to any client which is not required to be disclosed in under any act, and we are disclosing, we are violating our code of conduct. So in my opinion, if CARO is not applicable, we should not report the CARO in our audit report. Cash flow statement, as we discussed earlier, cash flow statement is not applicable in case of small companies. Even if you want, you can prepare, but if you are not preparing, there is no violation of any act. Friends, in case of small company, in most of the forms, certification of the practicing professional is not required. The form like annual return, any form which is related to changes in directors, charges creation, charges modification, the form is required to be certified only by the directors of the company. Practicing professional certification is not required at all. Friends, in case of small company, annual return is filed in form MGT 7A instead of form MGT 7. Friends, MGT 7 form is required to be certified by the company secretary, practicing company secretary, whereas MGT 7A is not required to be certified by any practicing professional. It is to be attested by the certified by the management of the company. Applicability of the abridged board report. Friends, under section 134, subsection 3A, for small companies, abridged board report is prescribed, in which few of the information which we require to give in case of small, other than small companies, are not required to be given in these cases, like information related to energy conservation, technology absorption, are not required to be given in case of abridged board report. So there are many points which we don't require to give in case of abridged board report. Friends, dematerialization of shares. Dematerialization of the share is one of the hottest topic, because the last date to get the shares dematerialized is 30th June. Earlier it was 30th September, but the government has extended this date, MC has extended this date, and now the due date to get the shares dematerialized is 30th June. So friends, if status of your company is a small company, your company is not required to get its shares dematerialized at all. Friends, these are two exemptions which are available to the small companies, but these exemptions are subject to one condition. The condition is that the company is not defaulted in filing its annual accounts in AOC 4 and annual return in MGT 7 or 7A. Friends, if company is fulfilling both these conditions, in that case, IFCR, Internal Financial Control Reporting, is not applicable. When we are issuing our independent auditor's report, IFCR point is not applicable on small companies which are filing their annual documents properly within the time with the ROC. And as per section 173 of the Companies Act, number of board meetings, section 173 says that every company is required to conduct minimum 4 board meetings in a year. But if status of your company is small company and you are complying with this condition, filing of annual documents, Then, if your company is holding 2 meetings in a calendar year, friends, here is use calendar year, not the financial year. If your company is holding 2 board meetings in one calendar year, then it will be assumed that your company has duly complied with the provisions of section 173 of the Act. The only subjective provision to this section is that the gap between 2 board meetings should not be less than of 90 days. आप ऐसा नहीं कर सकते कि you are conducting first board meeting on 30th September and you are conducting the second board meeting on 1st October. Then it will not be treated as compliance of this provision. You have to make a gap of at least 90 days between the 2 board meetings. Friends, in case of new companies, what precautions to be taken while conducting the audit? First thing, that after incorporation of a company, within 180 days, maximum period of 180 days, the company is required to file E-Form 20A. This form is filed for declaration for the commencement of business activities. Whenever the company is filing declaration, it says that we have commenced our business. Friends, please note that if this form is not filed with the registrar, the company cannot conduct any business activity. It cannot take any loan. It cannot conduct any business activity. It cannot enter into any business transaction. So we should take care that company has duly filed this IS 20A form. Friends, please note that if this form is not filed within prescribed maximum period of 180 days, 6 months, then ROC, by invoking the provisions of section 248, subsection 1 of the Act, can strike off your company. The companies which have not filed INC 20A within 6 months, these type of companies can be strike off by the ROC. E-Form ADT1, appointment of first auditors. While conducting first audit of the company, we have to check that whether the company after incorporation has filed this ADT1 or not. Friends, the filing of ADT1 is not a mandatory requirement. First appointment of appointment of first auditor, the company is not required to file ADT1 form. But being a good practitioner, we should advise to the client to file this ADT1 form. And while conducting the first year's audit of the company, we should check whether the company has filed an ADT1 or not. Because what is happening when companies are incorporated, they are incorporated by any company secretary. And what they do, they appoint any CA which is known to the management or which is known to the secretary. With mutual consent, they appoint. But after 6 months or 3 months or 4 months, when company comes to the operations of the company, the management approach to any other auditor. Then it's a responsibility of the auditor that he should check whether the form ADT1 is filed or not. Then accounting treatment of preliminary expenses. Friends, what Accounting Standard 26 says? Accounting Standard 26 says that whatever expenditure the company has incurred on account of incorporation of company, it should be written off in the same year in which the company is incorporated. Whereas Section 35D of the Income Tax Act says that the preliminary expenses will be allowed in 5 equal installments, 1/5, 1/5, 1/5. So what common mistakes incur here, that some of the chartered accountants write off the preliminary expenses in books as well in 5 equal installments. So while finalizing the accounts, we should take care that AS 26 provisions are duly complied with. Friends, in case of first year, as we discussed earlier, that the financial year will be end on the next 31st March if company is incorporated on 1st January or later on. In this case, we should mention in our notes to accounts in first year of audit that the previous year, the period for which we are reporting the figures is the period pertaining from this to this period. We should mention this. Then friends, now I think time is given, allotted me is getting over. Time given allowed me is up to 5 o'clock. So I will just discuss this audit trail. Friends, the point related to audit trail was effectively introduced from financial year 23-24. Last year, while conducting audit, we all have reported the points related to audit trail in our audit reports. The point related to audit trail says that if any company if any company is maintaining its books of account in software. So I will explain audit trail in a very simple manner. First thing, the company is maintaining its books of account in software. Then audit trail is applicable. This point is applicable. Else, this provision is not applicable at all. In case of small companies, where there are only 4 or 5 transactions in a year, like payment of audit fees, small bank charges, and filing of ROC fees, some of the chartered accountant has started to prepare the accounts in. They advise to the clients to prepare the audit financial statement in manually. They are maintaining the books of account in manual system. In that case, this point is not applicable at all. Friend, what is audit trail? Audit trail is a chronicle record. Whenever you are changing any data entry in your system, then the system should have the record that when that entry is modified, why this entry is modified, and how this entry is modified, and by whom this entry is modified. Then audit trail in last year, when we reported in our audit report of March 24, we reported whether the company has maintained the audit trail or not maintained the audit trail. There was a point also related to preservation of audit trail records. So friends, or preservation of audit trail record is also part of books of accounts, which is required to be maintained for current plus 8 years, as we are required to maintain all other books of account of the companies. In 23-24, when we were finalizing the audit, it was not required to report on this point because that was the first year when audit trail was applicable. So whenever we will finalize the audit of March 25, we have to take care that we have to report on this point as well, that the preservation of audit record is done or not, whether the company is preserving the record which is maintained under audit trail is preserved by the company or not. I think now Nanji is there. His video is started. We should conclude. I will conclude my session. I will share these PPTs with Nan sir. He will share these PPTs with all the members, participating members. If you have any query, so then we can discuss right now or we can discuss later on. I have given my mobile number and email ID in last of the slide. Because lack of time, the time allotted to me was very less. 1 hour is not sufficient to cover this topic, but still I tried to my level best to cover most of the topics. Thank you, sir. Thank you.
Thank you, Vikramji, and compliments for such a wonderful coverage in a very short time. The particular opening of I made by you was an eye-opener for all the participants. Even a small minute things like quotation of FRN, DIN, MRN, which was drawn out by you was very, very relevant, along with drawing specific attention to the definition of the small company. So on behalf of all of us, I thank and compliment to you for such a lucid and detailed presentation. Now, without taking much of the time, 2 participants have done some question. We'll quickly take up them and I'll request Vikram sir to respond them. Sir, PC Bansali ji has asked this question: while considering aging for trade receivables, whether the date of invoice or due date as agreed for the payment, what needs to be considered?
Date of invoice.
Okay, that answers your question. Sir, second question is from Atul Kasita sir. In MSME case, there are 45 days to be calculated from the date of invoice or receipt of the invoice by the service provider. That is the question.
It's again from invoice date only.
It is from the date of invoice.
Yes.
Thank you, sir. Very quick response and very nice session. We would now move to the next speaker. Friends, very important to note that at present, more than 750 participants had registered from across the globe and are taking benefit of such a wonderful initiative of CPE committee of the ICAI. For that, I compliment to the committee as well as both the speakers for sparing their valuable time. Friends, we have got with us now CA Shri GB Modi sir. I personally know him since last many years, and his contribution in the field of this topic related to the government scheme and subsidy to educate the member is phenomenal. Sir is into practice over last 35 years now. His area of specialization includes obtaining subsidy from state government, central government, NABARD, Ministry of Textile, National Horticultural Mission, Board, Ministry of Food Processing from central government, etc. Sir had delivered more than 30 physical seminars across the India and had been speaker in more than 80 sessions in the various webinar of the ICI and various other forum. Friends, we are very much fortunate to have Sri GB Modi sir amongst us today. Without taking much of the time, I shall request Modi sir to take charge of the session and enlighten us about about the next topic related to the subsidy. Sir, over to you.
Thank you, Nayan. Thank you very much.
Vikram,
First of
you
all,
may stop sharing the screen.
yeah. No, my screen is visible.
Yes, yes, it was visible, sir. It is visible. It was earlier visible. You may share it again, Modi sir.
I'm sharing. Is it visible now?
Yes, sir. Yes, sir.
So now it is visible, no? Okay, thank you. Thank you to the CP committee for inviting me. Today's topic, my natural habit of delivering lecture on MSME is to give my members, my colleagues in the profession about the professional opportunities available in the MSME sector whenever I discuss about this topic of MSME subsidies and the role of chartered accountant. Friends, if you ask me and if you see yourself, normally the entire CA profession is based on two ministries of the central government, that is Ministry of Finance and Ministry of Corporate Affairs. Just now we have listened to Mr. Vikram, which we have told about the audit in as far as the Companies Act is concerned. But if you ask me, there are 52 ministries in the central government, and each ministry, if you look or unfold, I think each ministry is going to become your client, because each ministry is having their particular scheme. Those ministries are created in the country by the Constitution of India to help the citizens of the country. And as far as the Ministry of Finance is concerned, it is a ministry which is giving opportunities, scope, work for the chartered accountants. So today's topic is to unfold the opportunities, to find the opportunities, to look after the new area of professional practice, which is sunrise area, untapped area, non-traditional area of practice. So my agenda today is to unfold in front of you, all the participants, about the professional opportunities available from MSME sector, the government schemes, and what role a chartered accountant can play in the ecosystem when the subsidy is declared by the government of India or the state government, and how we as a chartered accountant can become a facilitator, and how the industry will be benefited with the services we can provide, and how we can grow our practice. So today's agenda is to discuss with you the state-wise name of the schemes. Cold storage, it is a very important scheme, which is a national scheme and which is a very important sector in the country. Agriculture Infrastructure Fund scheme, the Pradhan Mantri formalization of micro. So there are 8 schemes which I am going to discuss today within the given time period of this 50 or 55 minutes. So state friends, I am coming to the state-wise MSME schemes in India. It is not possible for me to give you each and every scheme's detail, but I am just putting in front of you the name of the schemes. And if you ask me, if you are particularly from particular states, if you see the entire nations, the map in front of us, you name Jammu and Kashmir to Kerala, and right from Gujarat to Manipur, Mizoram. You name the state, each state government is having state-specific industrial policies for the growth of industries in their respective state. So friends, just ask yourself, have you explored, have you known about any schemes in the state of Rajasthan if you are belonging from the state of Rajasthan? If you are from Bihar, are you aware about the schemes of Bihar which are given to the MSME sector by the government of the state of Bihar? So you name the state. So it's a very vast topic. It is state specific and there are certain schemes which are national level schemes. So both we are going to discuss today. So since I belongs to Maharashtra, Maharashtra government is giving rate. If you see nowadays, in each of the states, in each of the state of the country, there are investor summits are undertaken. And what is those summits? Each and every summit, the state government is giving red carpet treatment to the entrepreneurs, not only from India, not only from Bharat, from the world over to come and establish their industry. आइए महाराष्ट्र में इंडस्ट्री लगाइए, आइए गुजरात में इंडस्ट्री लगाइए, आइए मध्य प्रदेश में लगाइए. For what? They are giving attractive benefits to the entrepreneurs to come and establish their industries in their respective state. Just ask yourself, my friend, what role we are playing, what role we can play, and how we can help the state government to get implemented their scheme. The entrepreneurs in the country or the entrepreneurs from the world, they are not aware about how to claim the subsidy from the state, how to unfold, how to analyze the subsidy, what are the terms and conditions and guidelines, where the subsidies are higher and where the subsidies are lower. So we as a chartered accountant has very big role to play in the life of the promoter of an MSME, how to take the advantage of the subsidies which are declared by the respective states government. So Maharashtra government has organized MSME Defense Expo in 24-26 to attract the investment in defense sectors in the state of Maharashtra. Friends, in front of you, there is a slide which is saying that there are 14 schemes in the state of Maharashtra. Can you imagine the opportunities, the role a chartered accountant can play in the life of the MSME? Certain schemes are sector specific, certain schemes are related to MSME, certain schemes are related to the development of the woman, महिला का आत्म सक्षमीकरण करना, आत्मनिर्भर महिला बनाना. So there are 14 schemes. Just imagine within the state of Maharashtra, those chartered accountants who are doing this MSME practice, they have the opportunity, they have the role to play, that to analyze the policy, to unfold the policy, to educate the entrepreneurs in respective schemes, whosoever is trying to manufacture or to establish their manufacturing unit in their respective states. So Maharashtra package scheme of incentive, which I say it's a mother policy of all the policies of the state of Maharashtra. Whatever is manufactured in the state of Maharashtra, a manufacturer is eligible to get subsidy from 0% to 100% of the project cost, subject to a ceiling of 50 crore rupees. Can you imagine? 100% of the project cost up to 50 crore is given by the state of Maharashtra for the manufacturer in particular location. The entire state of Maharashtra is classified from 0% to 30% to 40% to 50% to 60% to 80% to 100%. So the promoter are asking to the chartered accountants, to the entrepreneurs or to the government agencies where I should establish my unit so that I can get the maximum financial benefit by establishing my manufacturing unit. So friends, the role of chartered accountant. We can download the policies, analyze the policy. Whenever the promoter wants, they will contact you, sir, which is the best location, how you can help me to get the subsidy, what are the terms and conditions, where to make the applications, where to process the application, what documents are required. A role of chartered accountant. Maharashtra State Women Entrepreneur Policy, Maharashtra Chief Minister Agro and Food. See, Maharashtra State Women Entrepreneur Policy, which is specifically created by the state of Maharashtra, first time in the nation. Maharashtra was the first state in the country who has developed a specific policy for the Atmanirbharta of Mahila entrepreneurs, women entrepreneurs. So it is a policy which is giving extra benefit to the promoters of the unit which are owned by women entrepreneurs. Agro and food processing, sector specific policy, Maharashtra textile policy, what is happening in the state of Maharashtra? Right from 45% to 30% of the machinery cost, irrespective of the project cost, maybe 10 crore, 10,000 crore, 50,000 crore, the entrepreneurs is eligible to get 45% to 30% of the machinery cost as cash subsidy under Maharashtra textile policy. Maharashtra ITES policy, information technology enabled policy, Maharashtra electronic policy. You know, the government of India, Ministry of this Ministry of Mighty is having the visions of Atmanirbharta in electronic products. Not only in Atmanirbharta, they want to export electronic products from India to other countries. For that, the government of Maharashtra has come out with a Maharashtra electronic policy. And can you imagine, even in Nariman Point at Bombay, even in BKC at Bombay, if anybody establish electronic manufacturing unit, he is eligible to get 100% of the project cost as subsidy by the state of Maharashtra under Maharashtra electronic policy. 100% of the project cost. Maharashtra logistic park policy, Maharashtra state electric vehicle policy, Maharashtra gems jewelry, Maharashtra tourism policy, Maharashtra cloud, Maharashtra fintech, Maharashtra aerospace and defense, Maharashtra telecom. Friends, there may be much more than this what I have just shown to you. So just imagine the scope. This is untapped area. This is sunrise area. And the Institute of Chartered Accountant and the CPE committee has arranged a very appropriate topic in front of you to educate our members about the upcoming area, new area, untapped area, sunrise area of practice. So friend, this is as far as related to the state of Maharashtra. Vibrant Gujarat, right from 2003 onward till 2024, the Gujarat government is attracting the investor world over to come and establish their manufacturing unit in the state of Gujarat. And what are the policies of the state of Gujarat? These are only namesake. More than 14 policies are there. New Industrial Policy 2025, Gujarat Global Capability Center, Gujarat ITITES policy. See, I have told you the Maharashtra ITITES policy. The opportunity to the chartered accountant, the role of chartered accountant is to make a presentation, due diligence, and a comparison between Gujarat IT policy and Maharashtra IT policy. What Maharashtra government is giving and what Gujarat government. If suppose any entrepreneurs come from world over to Bharat and he asked to you, Mr. Nayan, can you explain me what is the difference? Whose government is giving more benefit as per ITS industry is concerned? Whether it is a Gujarat government or whether it is a Maharashtra government. So comparison, when there are two specific policies, similar policies between two states, a comparison can be made by a chartered accountant who is in this MSME practice. So Gujarat ITS policy, Gujarat is also having Gujarat electronic policy. Now again the comparison between Maharashtra and Gujarat electronic policy, which is the best state, which is offering maximum benefit if somebody wants to establish a electronic manufacturing unit. Semiconductor policies, a specific policy which is the need of ours, of our nation Bharat. Gujarat renewable energy policy, you know the benefits of the green energy. So government of Gujarat, the state government of Gujarat has come out with the renewable energy policy. Gujarat solar power policy. Mukhyamantri Mahila Utkarsha Yojana. The name is different, but the object is same. Maharashtra is having Maharashtra Woman Entrepreneur policy. Here the Gujarat government is having different name. Mukhyamantri Mahila Utkarsha Yojana. Atmanirbhar Gujarat scheme 2022 for assistance to industry. This is a scheme which is specifically created for MSME sector. Cottage and Rural Industries Policy 2000, Gujarat Tourism Policy, Maharashtra Tourism Policy, Gujarat Tourism Policy, Gujarat Textile Policy 2024. The government of Maharashtra has first introduced the Maharashtra Textile Policy in 2011, which was revised in 2018, which was again revised in 2024. Similarly, the Gujarat government has followed. Both are the competing state. You know, in nation, the biggest cotton growing sector is the first is the Gujarat, the next one is the Maharashtra. So both state are giving importance to cotton processing industries, farm to fiber, 5A. Again, a comparison between Gujarat textile policy and Maharashtra textile policy, Gujarat health policy, Gujarat sports policy. So huge opportunities are available to the chartered accountants who are practicing in the state of Gujarat. You can play a big role in the life of promoters who want to establish their MSME unit. You can be the facilitator, you can be the mentor, you can be the supporter of the promoters to get the subsidy approved, sanctioned by your guidance from the state of Gujarat in the hands of the industries which are putting their industry in the state of Gujarat. Karnataka, friends, as I told you, it is not only the Gujarat and Maharashtra. You name the state in the country, each state government is having their state specific policies. So as far as Karnataka recently, sorry, recently I had been at Bengaluru in a Karnataka Chartered Accountant Association annual gathering. Advantage Karnataka. See, against the policy of the Karnataka, Industrial Policy 25 to 32, Global Capability Center, Cyber Security Policy, Clean Mobility Policy, Krushi Aranya Yojana, Tourism Policy. Again, Maharashtra is having tourism, Gujarat is having tourism, Karnataka is having. Startup policy, you know Karnataka, Bengaluru, it is a startup hub of our country. So startup policy, engineering, research and development policy, research, development and innovation policy, agribusiness and food processing policy, electric vehicle policy. You know nowadays there is India or Bharat will have by 2030, 30% of the vehicle will run on the highways which will have use of electricity as their energy. So export promotion policy. So Karnataka, those friends who are from Karnataka, advantage Madhya Pradesh, few months before, the government of Madhya Pradesh has taken advantage Madhya Pradesh in the Bhopal. And they have declared various policy in that investor summit on a single day. So see the opportunities available to the chartered accountants, the role a chartered accountant from Madhya Pradesh can play. And friends, when I am speaking, there is a state-specific policies. Don't restrict yourself to the state only. If you really are interested to become a consultant or play a very important role in the life of the promoters, where to establish a unity, at least you must be aware about what are the policies available in different states. Somebody else, one entrepreneur call you from Japan and he asks you, sir, I want to establish a project of 5,000 crore rupees or 500 crore rupees. What will be the location? What is the best location? What are the policies of the state of Madhya Pradesh, Gujarat? If you are aware, you can very well say, sir, I think for your project, the best state can be the state of Karnataka or the state of Gujarat or the state of Maharashtra, considering the nature of your product and the nature of investment you are planning to do. So at least you should know the name of the scheme. I cannot say we can be expert in all the 36 states of the country, but at least we must know what are the policies of different states of country in the respective states. So friends, these are the policy, Madhya Pradesh Industrial Promotion Policy. See, the name of the policy is to promote the industry. And here, the role of chartered accountant. Because the state government is incentivizing the industries in their state to promote the employment, to promote the entrepreneurship. in their respective state. They want to create the employment in your state. They want to convert the raw material grown in their respective state in their own state. So we as a chartered accountant, what we are doing, the project is established by the promoter. Then he has approached to us, can you do my audit? Then he has appointed. No, we can play the role as a chartered accountant in the life of the promoter of any MSME when the idea comes in his mind that he want to establish a unit, he is interested to establish a unit. We can guide him, handhold him, support him, mentor him, right from the concept to commissioning of the project. And the best part of this practice is that, my friends, when you are holding hand with the promoter, when the idea has come in his mind, and you have supported him throughout his ecosystem till the commencement of his project, I am sure I will give in writing to you on stamp paper that he will remain with you for your traditional practice, whether it is income tax, GST, TDS, statutory audit, tax audit, company audit. So it is, in my opinion, it is a janani of practice. It's a birthplace of your traditional practice. So friends, those who are not into this area of practice, try to enter in this. At least when whatever state you belongs, understand the state industrial policies. Visit to the industry department website of your respective states. So friends, simultaneously, I am giving you the opportunities in the respective state. So these are the various policy. I have so many things to mention in front of you. Madhya Pradesh logistic, Maharashtra logistic, Madhya Pradesh. Madhya Pradesh MSME development, Madhya Pradesh startup policy, Karnataka startup policy. Madhya Pradesh renewable, Gujarat renewable. Madhya Pradesh scheme of implementation of biofuel projects, CNG, CNB, biofuels, hydrogen fuels, CBG, compressed biogas, Madhya Pradesh pump hydro storage scheme, Madhya Pradesh health sector investment promotion scheme, Madhya Pradesh integrated township policy, Madhya Pradesh electric vehicle. Nowadays, you name the state in the country, each state is having their electric vehicle policy. Madhya Pradesh tourism policy, same as Maharashtra, same as Gujarat, same as Karnataka. You find every state, they are having state-specific tourism policy. Madhya Pradesh film tourism policy. First time in the state, they want to have Bollywood, Hollywood films to be shooted in the state of Madhya Pradesh. So that they have come out with the Madhya Pradesh. No, there is no, nowadays there will be no monopoly of the Bombay, or that only films will be made in Mumbai or in the south. Now the films can be shooted in Madhya Pradesh also. Madhya Pradesh civil aviation policy. These are the policies of the Uttar Pradesh going to become Uttam Pradesh in coming area. It will be the leading state in the country in coming years. Maharashtra, Gujarat. It is I think going to change the industrial scenario of the state of Gujarat, the way the Uttar Pradesh government is working. So Uttar Pradesh startup policy, Uttar Pradesh data center policy. You know data centers importance. Defense policy 22, Uttar Pradesh pharmaceutical, Haridwar. You have seen Haridwar for Ganga, but if you go to Haridwar, go to the industrial estate of Uttar Pradesh, you will find world की हर फार्मा इंडस्ट्री की वहां फैक्ट्री बनी हरिद्वार. उत्तर प्रदेश फार्मास्यूटिकल इंडस्ट्री पॉलिसी, उत्तर प्रदेश टेक्सटाइल एंड गारमेंटिंग पॉलिसी, इलेक्ट्रिक व्हीकल पॉलिसी, उत्तर प्रदेश इंडस्ट्रियल इन्वेस्टमेंट पॉलिसी, सोलर एनर्जी पॉलिसी, ITS पॉलिसी, tourism policy. As I told you, each state is promoting tourism in their respective states. Uttar Pradesh warehousing and logistic policy, one district, one product. This is a concept introduced first time in Bharat by Uttar Pradesh government. One district, one product. Each district is having uniqueness in its own, and how to convert that uniqueness into a finished product. Toys in Uttar Pradesh, Merut is a toy center of the Bharat, where these toys are manufactured. One district, one Banarsi Sari is the attractions of Banaras. that is Banaras ki sadi. So this is one district, one product scheme of the Uttar Pradesh. Tamil Nadu. Recently, Tamil Nadu government has organized Global Expo and Knowledge Summit in 2024. The name of the policies. I think you would have wondered why how much policies are there and what role we were as a practicing chartered accountant, what role we were playing. I think you will agree with me, and rightly the institute has come out with the committee on MSME and startup, and the committee on MSME has started 11th day certificate course on MSME, where these all policies are unfolded, declared, the opportunities are available. So friend, as far as Tamil Nadu is concerned, Tamil Nadu Life Science Promotion, Tamil Nadu MSAND policy. What is MSAND? It is a natural sand. It is a man-made sand. See, whatever sand you use in construction industries, those sand is extracted from river. Those sand are uneven. But now this sand, which will have the ISI certification, which will have the density, thickness, equivalent, same thickness, that is man-made sand. Tamil Nadu man-made sand policy. It is not a natural sand. It is a man-made sand. So that is MSAND policy. Tamil Nadu Research and Development, Tamil Nadu State Disaster Management, Tamil Nadu Logistic Policy, Integrated Logistic Park. Say the name may be different, but the vision and mission is same, logistic development. Tamil Nadu Startup and Innovation, Tamil Nadu Safe Ethical Artificial Intelligence Policy, Tamil Nadu Blockchain Policy, Tamil Nadu Policy for Promotion of Farmer Producer Organization. Friends, we are registering farmer FPOs and FPCs. We are doing audits of FPCs. But the government of Tamil Nadu is having a specific policy for promotion of farmer producer. And see what this farmer producer company will do. They will convert the agriculture produced by the agriculturists in the state of Tamil Nadu into finished product. So the ultimate benefit will go to the farmers. The perishable, the fruits, the vegetables, the grains, the pulses which are manufactured or which are grown by the farmers will be converted immediately by these FPOs. Role of chartered accountant, immense role. We can play a very, very important role in the life. A state policy for children, affordable urban housing, Tamil Nadu industrial policy. Chhattisgarh, so many policies are there. Rising Rajasthan. Even this difficult state which is known for forest or desert is nowadays developing in such a way. Rajasthan has grown nowadays industrially very fast, and they are having various RICO, Rajasthan Industries Investment Corporation Limited, which is providing a ready to use industrial land to the promoters or to the entrepreneurs in the state of Rajasthan. One district, one product policy. Mineral policy. What is mineral? Rajasthan is very rich in minerals. Red sand, stones, marble, granite. So the government of Rajasthan has come out with a mineral policy of the state of Rajasthan. Cluster development scheme, MSAND policy, similar to the state of Tamil Nadu. MSME policy, integrated clean energy policy, Rajasthan tourism policy. Rajasthan was famous for tourism. Again, a comparison between Gujarat, Madhya Pradesh, Rajasthan, Maharashtra, Tamil Nadu, immense role. A chartered accountant, if we concentrate on one policy, only tourism policy, and as a CPE committee, we held on each Friday Rajasthan State Tourism Policy, next Friday Maharashtra Tourism Policy, next Friday Gujarat Tourism Policy. We will educate our members all the tourism policy of all the. There are only 12 months in a year, or 52 Fridays in the 1 year. but all the tourism policy can be unfolded, can be educated, but with our members. Rajasthan logistic policy, same way. Rajasthan data center policy, Rajasthan electric vehicle policy. I think this electric vehicle, data center, logistic, MSME, tourism are the buzzword in the each and every state of the country. Rajasthan startup policy. See, once upon a time, Rajasthan was known for banyas, vyaparis, businessmen. They are known for businessmen. They are spread all over India, Bengal, Calcutta, Delhi, Mumbai, Rajasthan, Ahmedabad. Everywhere they are shifted from Rajasthan to do the business. That the state is having Rajasthan startup policy. So the opportunities in the state of Rajasthan, friends, I have given very few states detail about you, but just imagine the scope available in the country. Just imagine if you see, if you analyze the state-wise policy and I think institute, I don't think institute has ignored, we member has never thought that this can be an area of practice. Here we can play a role. Here we can guide the entrepreneurs in the country. What has happened in our syllabus, in our articleship, we all the members has been given or taught about doing the tax audit, filing the income tax return, filing the GST return, doing the bank audit. But we have never thought beyond that. Yes, whether we can play a role in the life of entrepreneurs to get, and this is a win-win situation, my friends. See what is happening in your traditional practice. You are telling your clients to pay advance tax, pay GST, pay TDS, pay so-so taxes. And what is happening in this MSME subsidy practice? You are getting money back from the state government. You are getting money back from the central governments. So the altogether different approach. The entrepreneurs is getting cash benefit by establishing the unit at a particular location in particular states. We are doing the tax audit, we are allowing expenditure, we are making remarks, adverse remarks, or we are saying that violation of the law, and then asking the fee from the client. Here, it is altogether different. We are helping, supporting, handholding, mentoring, guiding to the promoters and helping him to get the benefit from the state. So he will be very happy to pay. It's a win-win situation. It's a best professional area of practice, untapped area of practice. So friends, I have just introduced you sub-state policies. Now I am come to the very, very important concept, the necessity of the country, the cold storage. You just imagine wherever you are staying, whether it is a growing sector or whether it is a consumption sector. What is growing sector? Himachal Pradesh or Jammu and Kashmir is famous for apple. If you ask me Nagpur is famous for orange. If you ask me Nasik, it is famous for grapes. If you ask me red chili, it is Guntur, it is Nandurbar, it is Sri Ganganagar in Rajasthan. So there are certain areas in the country where the horticulture produce are produced by the local farmers in large quantity. And the inheritance nature of this agriculture produce is the perishability. If it is not stored in a proper appropriate atmosphere, the perishable fruits and vegetables will get spoiled. Not only spoiled, it will not be purchased by the customers in the country. So what is the necessity for such? That is a post-harvest management to increase the shelf life of the perishable commodity. So cold storage is the indispensable part as far as fruits and vegetables of the country is concerned, which are grown in the country. You cannot sit in a train nowadays in this summer season unless it is an AC. Just think you are a human being. What will happen if the apple, grapes, bananas, or say perishable manuka, or say badam, kaju, pista, say butter, mutter, paneer, ghee. If these commodities are not stored in cold storage, they have to be sold in the market as a distress sale at a cheaper rate because of the inherent nature of perishability of those commodities. So cold storage is an indispensable part of this, and for that, the central government, Ministry of Agriculture and Farmer Welfare has come out with a department which is known as National Horticulture Board. And this National Horticulture Board is the apex institution in the country which is subsidizing for establishing cold storages for horticulture and fruit products in the country. For it is known, the scheme name is known as Capital Investment Subsidy Scheme for construction of new cold storages, expansion of existing cold storages, modernization of cold storage with change in technology, and for storage of horticulture produce. In principle, I'm just keeping because we are interested in how much subsidy is made available by the National Horticulture Board for establishing the cold storages. Sir, the subsidy is 35% of the project cost in general areas and 50% of the project cost. Just imagine 50% of the project cost in hilly and scheduled area. What are the hilly area? Himachal Pradesh, Jammu and Kashmir, state government notified TSP area, tribal subplan area, ITDP area, integrated tribal development plan area, or schedule area which is declared by central government, Ministry of Tribal Affairs as schedule area, Dang district in Gujarat state, Badwani district in Madhya Pradesh state. So there are state, the list of schedule area is available. What a role a chartered accountant can play. If somebody comes to you and he asks me, sir, I want to establish cold storage in, say, this land belongs to me. So I don't have to pay the cost. But the land does not fall under schedule area. So what will be? He is eligible for 35% subsidy. But if you are aware, as a practicing chartered accountant, you are aware which are the schedule area and which are the hilly area, you can say to that gentleman, sir, adjoining to your land, hardly 2 kilometers away, if you establish the cold storage, it falls under schedule area. It falls under hilly area, and you will be eligible to get 50% subsidy. So the 15% additional benefit will go to the promoters. Here the role of chartered accountant. And the maximum storage capacity up to which the National Horticulture Board gives the subsidy is 20,000 metric ton. Friends, in Bombay, at New Bombay area, you will find cold storages are established because Bombay is the biggest consumption center. 2 crore of population, nothing is grown. There is no farmland. There is no farming activity happening in Mumbai. But the population is the biggest advantage of Mumbai. And to fulfill the stomach requirement of the population of Mumbai, fruits, vegetables, paneer, ghee, butter, ice cream, so many things are stored in cold storage. And New Bombay, there are number of cold storage which are established by the promoters of India and to some extent by the promoters of Dubai. I have seen one cold storage in Mumbai which is having 15,000 metric ton capacity. The entire cold storage was full with khajur. They are having salting, grading, repacking, packing facility in that cold storage where those dates are packed in 250 gram, 500 gram, 1000 gram in different packing. So this way, the cold storage is eligible to get subsidy from 30, I can give a 2-hour lecture on this particular industry. And as an chartered accountant, if you have high net worth client who says that I want a pension income in my life, I want to have a permanent income, passive income for my family, you can suggest that clients to establish a cold storage, because the cold storage is having a life of 100 years and there is no substitute for cold storage to increase the self perishable life of the cold storage. No substitute. The fruits, vegetables can be stored only in cold storage. There is no alternate technology will come that will increase the shelf life of the perishable commodities. So friends, if you have any clients who is having net worth, who is willing to invest 10 to 15 crore rupees and who is having land in either in growing sector or in consumption sector, you can suggest it, not for subsidy purpose, not for subsidy purpose. I'm not saying, but as a permanent passive income. Cold storage is nothing but a lodging and boarding. Lodging and boarding. But lodging has option. A person can go 2-3 places. But cold storage is having a specific purpose. So this activity, how much is the subsidy? It is the subsidy, the National Horticulture Board gives subsidy above 5,000 metric ton capacity. And see, I have given you the list of the state government policies. There is an agro and food processing policy. So in that agro and food policy, specific policy, the state government is also incentivizing the cold storage. In addition to that, the central government at national level is providing subsidy for establishing the cold storage through the National Horticulture Board. So if the state government permits, you can take both the benefit, state as well as the central government. So if your cold storage of having this particular type, the subsidy will be for, see, this is a capacity of the cold storage. This is the NHB rate. See, NHB has prescribed their upper cost per metric ton for establishing. Whatever the cost is incurred by the promoter, NHB says that for 6,500 metric ton, our cost per metric ton is 9,120. We will consider 5 crore 92 lakh 80,000 as the cost. And if the cold storage is in 50% area, the cold storage owner will get 2 crore 96 lakh 40,000 rupees subsidy. And if it is 35% area, it is 2 crore 7 lakh. Just friend, ask yourself, with your consultancy, with your role as a chartered accountant, with your knowledge, with your support, with your mentorship, with your guidance, the promoter has got a subsidy of 2 crore 7 lakh. Otherwise, what would have offended if the promoter was not aware about the NHB scheme and he has started the construction of the cold storage? Then what will happen? The guideline of NHB says that you cannot put a single brick on the cold storage land unless you have got a GOC, grant of clearance from NHB. I don't know why this condition is prescribed by, why this conditions, or you can say restriction is prescribed by NHB. The cold storage will not be eligible to get the subsidy. Here the role of chartered accountants. If we are aware about the terms and conditions and guidelines of the NHB, we can help the promoters to get 2 crore 96 lakh to 2 crore 7 lakh rupees subsidy for establishing 6,000 metric ton cold storages. For 8,000, this is the subsidy. For 10,000, 4 crore 8 lakh, 2 crore 85, 20,000 metric ton, 4 crore 8 lakh to 2 crore 85 lakhs. For this another type of cold storage, construction quality differs, the rate differs. Here the rate was 9,120 per metric ton. Here the rate is 11. So what technology, how construction should be done so that we can get the maximum subsidy available to us? So here 3 crore 70 lakh to 5 crore 10 lakh, 2 crore 59 lakh to 3 crore 57 lakh. So friends, this way cold storage, I think you can unfold you visits to the website of this ministry, or if you are really interested, you can mail to the CPE committee that we want to have a specific lecture on this cold storage activity. Agri infrastructure, friends. Friends, we all chartered accountant are very interested in listening to the finance budget whenever it is declared by the Honorable Finance Minister of the country. But for me as an MSME consultant, my very important topic is to listen to Honorable Pradhan Sevak of our country from Red Fort. Because when the Pradhan Mantri is speaking from Red Fort, he is not speaking to the nation of the country. He is not only speaking to the citizen of country, but he is giving disha, margadarshan, and direction to the whole world what India is going to do. And in 2021, when the Honorable Pradhan Sevak has given his proclamation from the Red Fort, he has declared that I am going to declare Agri Infrastructure Fund of 1 lakh crore rupees. Sabne suna, but nobody has followed this. Nobody. What this Agriculture Infrastructure Fund is? It is providing the 1 lakh crore is created by the finance minister for agro processing and food processing industry. What are the benefits available to the agro and this under this Agri Infrastructure Fund scheme? If anybody takes any loan from any bank in the country, the loan up to 2 crore rupees will be without any collateral. No collateral security is required to be given under Agri Infrastructure Fund. That is the first benefit. Second benefit, the bank cannot charge you more than 9% rate of interest. There is a second restriction. The bank cannot recover from you CGT MSE commission because the loan is sanctioned under Agri Infrastructure Fund scheme. The fourth benefit, the loan up to 2 crore will be given at the rate of 9%, and the borrower will be entitled to get 3% interest subvention on quarterly basis. So the effective rate of interest will be only 6%. How much? 9 minus 3%. And this 3%, the bank automatically claim from the ministries and get it recovered and credit it to the borrower's account. The maximum repayment period of this loan under AIF is 7 years with a moratorium period of 24 months. So you get the opportunity to get concessional rate of interest at 6%. So whenever you are appraising or getting any loan proposal approved from nationalized bank, tell the banks to give 24 months moratorium period, because getting a loan at 6%, I think, and in addition to that, whatever I have discussed about the state specific policies, each state government is offering 5% to 6% interest rebate on term loan taken by bank for establishing the project in respective state. Gujarat government is having 5% to 9% interest reimbursement under Atmanirbhar Gujarat policy. Maharashtra government is having 5% interest refund on package scheme of incentive. So what will happen? There will be 0% interest. So our members may not be aware about this agri infrastructure, but once your loan is approved and it is not approved, it is not uploaded, it is not locked in by and the biggest irony is that most of the bankers are not aware about this agri infra fund scheme. They themselves do not inform to the borrower, sir, you are from farmer producer, you are doing agri business, you are a startup in agri, you are establishing cold storage, you are establishing food processing industry, you can get the benefit of this AIF. They themselves are not taking. So this is agri infrastructure fund scheme under which up to 2 crore of rupees. Suppose you are borrowing 5 crore. Suppose your project which is in food processing agro process and your entire term loan is 5 crore rupees. Banker says, no, since your loan is 5 crore, you are not eligible under agri. Friends, you have very big role to play. You can say to the banker, have term loan number 1, 2 crore under agri infra, term loan number 2, non-agri infra, regular rate of interest, without interest subvention. There will be term loan 1, term loan number 2. The chartered accountant, you have played a very great role in the life of the borrower. He has got a concession of 3%. See, whenever you get a shortfall in collateral security, and if you are in agro processing, if you are your unit or your client is establishing a agro processing, food processing, solar panel installation of the rooftop of any food processing unit is also covered under agro processing, under this AIF scheme of the central government. Which are the centers, sir? Given in 1 hour may not be possible. This PPT will be available to you. You can transfer you whatever. If you are interested, the CP committee will forward this PPT to all of you. PMFME scheme, Pradhan Mantri Formalization of Micro Enterprises. This is a scheme which is implemented by the Ministry of Food Processing Industries in the government, in the central government. And what it says, if any promoters who is in food processing sector or a group of people who are doing any food processing, फिर वो वेफर्स हो, food processing industries हो, oil mill हो, grading हो, salting हो, if he is a processing, and if the project cost is less than 1 crore, then he is eligible to get subsidy. See, these are the sectors like fruits and vegetable processing, canning, freezing, dehydration, milk and poultry, dairy processing, milk pasteurization, fish, grain milling, oil extraction, spices, contaminated beverages, juice, confectionery, ready to eat, ready to cook, organic food, packing materials, labeling, logistic. These all sector, if the project cost is below 1 crore, they are eligible to get subsidy at the rate of 15% of their project cost, subject to maximum 10 lakh rupees under this PMFME scheme of the Ministry of Food Processing Industries, Government of India. Friends, listen, very start of my lecture I have told you, there are 52 central government ministries. And that's why Mr. Our chairman, sir, our sir, chairman, sir, of this committee, Satish Gupta ji, has very well told that I am having the idea. Our institute has never thought that all the 52 ministries of the central government will provide, and we can get, or we can support, or we can fulfill the vision of this 52 ministries. There are these ministries are never thought that this can be a clients and we can be a mentor, or we can get the professional opportunities from this ministry. So this is Ministry of Food Processing Industry having PMFME scheme, Pradhan Mantri Kisan Sampada Yojana, Ministry of Food Processing Industries. And this Pradhan Mantri Kisan Sampada Yojana is having 5 schemes under its vision. The Pradhan Mantri Kisan Sampada Yojana is the name given by the Honorable Pradhan Sevak of our country for various schemes of the Ministry of Food Processing Industries, and they are having number of schemes under this processing opportunity for investment in food processing industries, that is fruits, vegetables. If you are a manufacturer, if you are a dairy, if you are a milk powder manufacturer, if you are a ready to eat, ready to cook food manufacturer, recently on 11th April 2025, the EOE has closed by the Ministry of Food Processing Industry, and the quantum of benefits is 35% to 50% of the project cost. Up to 5 crore rupees, the maximum benefit up to 5 crore rupees. So friends, I have number of schemes to be declared in front of you. Agriculture marketing infrastructure being for silo, godowns, cold storages. There is a scheme declared by the Ministry of Agriculture, and the subsidy is up to 75 lakh rupees to 1 crore rupees for various types of storages of agro commodities. The subsidy is for 2 crore 66 lakh, 1 crore, 1 crore 50, 100 lakhs, 75 lakhs. MSME competitive link scheme, that is a scheme created for the ZED certification, zero effect, zero defect. And recently the government of Ministry of Electronics and Information Technology has come out with the electronic component manufacturing scheme, which is a scheme which will give boost to the component required in mobile phones. We are exporter of mobile phones, but what is happening? We are importing the components, making the components, using the components in electronic products, and then again it is exporting. Now what is happening? The government is boosting now to establish the electronic component manufactured within the country. So friends, with this I have tried my best to put in front of you the opportunities, the role a chartered accountant can play to get the subsidy from the central government, from the state government in the hands. So with this, thanks, over to you at head office of CPE committee.
Thank you very much, sir, for such a detailed analysis of various subsidy available in the various section. The particular dimension given by you to compare the subsidies state-wise and give consultation to the client will really help us to be a global or the national consultant by analyzing and decoding this. I would further like to tell that probably not only the chartered accountants, but the ministry themselves, if would have a query, they would be coming to you only, sir, for understanding and decoding the scheme which they have made. In such a nice manner, you have decoded the schemes for all our members. There has been no much questions as I have seen the admin panel, but most of them have requested for this presentation to be circulated, and the CP committee in due course would do the same. Sir, both the faculty have analyzed the respective given topic very nicely and gave us different dimension to deal with this closing year session, which will be coming, and we will be taking care of the Companies Act. And sir, you have explained the policies in such a nicer way and given us the direction, not only directly giving the fish, but teaching us how to do the fishing, so that each one of us would be able to gain insight and develop new areas of the practice, and giving such a wonderful suggestion to the CPE committee, which we have noted down positively. Thank you very much, sir. And that is all from our side. See you all again on the next Fridays to come. Friend, it is noteworthy that today also more than 800 members are attending this webinar right now. Thank you again. Thank you so much.
Thank you, sir.